I'm Ashton Addison from EventChain for Investment Pitch Media and FinTech News Network. And today on Blockchain Interviews, we have Erick Pinos, the America's Ecosystem Lead of Ontology and advisor for Wing Finance. Erick, welcome back to the show. It's great to have you here again.
Thanks, Ashton. It's been a while. Like a few months.
It has, and a lot has happened in the cryptocurrency space, especially in the DeFi space, has had explosive growth. And I really want to dive into Wing Finance's DeFi ecosystem. Really, since we spoke, the DeFi ecosystem has grown over 10x, and I think it's going to continue along that trend. And now Ontology has their new in-house platform, Wing Finance, which has been built on top of Ontology's technology using cross-chain DeFi, lending, and other decentralized finance functionality. This is very exciting stuff. Can you start by just explaining exactly what is Wing, how does it work, and how does it provide value?
Sure. So Wing is a cross-chain credit-based DeFi lending platform. We are built on the Ontology network, and you can go to it like a website, wing.finance. And on it, you can lend out and borrow assets. So, how you would think about DeFi lending. And there's two main modes to the lending and borrowing components. So we have different pools that take on different rules for lending and borrowing. So the first pool, which is the flash pool, is your typical over-collateralized pool. So you can lock up a certain amount of an asset that you want. And the supported assets. So we support Ontology native assets like Wing, Ontology, Ontology Gas. We also support Ethereum assets. So we support DAI, USDT, WBTC, RenBTC, ETH itself, Uni. And the way that we support those is we use a project called the Poly Network to cross-chain transfer tokens from the Ethereum network over to the Ontology network. So it wraps the token. And then on the Ontology chain, you get that equivalent of that token in wrapped form. So you're able to lend those tokens out on the platform. And then, you over collateralize. So if you want, you can borrow from the platform by locking in an amount greater to the value of what you're borrowing. So that way I can margin trade. I can use tokens as leverage. I can use it to take out a loan and then pay back the loan at a future date. So, your typical DeFi lending, stuff. The second pool is the inclusive pool. And so the inclusive pool is using a credit-based system. So we're using a decentralized credit score to give users a rating. And then using that rating, users will be able to lower their collateral and, get better interest rates when doing these loans.
Very interesting. And DeFi has really exploded this year. How long has the Ontology team been working on Wing Finance, and when exactly did you launch it?
So Wing Finance was launched in September. It took about the summer to put together the plan for the product and the lending pools. OScore was, which is the name of the decentralized credit score. So that's built by Ontology, and that uses our OntID system, which is our decentralized identity solution. And so that's existed for a while. That's been like over a year of OntID existing. And throughout the past few years, we've been exploring and using OntID in different use cases, from supply chain to credentialing, like for academic credentials, for employment credentials, hospital records. We've been using it for copyright and for licenses. I think more recently, with the explosion of DeFi, it's a natural progression that you have a decentralized identity solution. Having a credit score would be one of the most interesting things to make decentralized and to use that identity solution for. So that's kind of what gave birth to OScore, which is our solution for that. And then also to the Wing platform, because, the first use case of a credit score is to use it for loans.
Definitely. And now there's a lot of different DeFi projects that have been popping up, some better than others, some more credible. Wing seems to be in good company, being on top of the Ontology blockchain. Now, with Ontology's tech stack underlying Wing Finance, is there a competitive advantage? Some people aren't really familiar with the details of Ontology's protocol, but is there a competitive advantage or some unique properties that allow Wing to have better value because of Ontology's tech stack that it's partnered with?
Well, I think first is the credit score that I mentioned. We're one of the first projects to have a live credit score that people can use to lower their collateral requirements. which is very useful for people that are trying to take out loans but don't already have they're not using the collateral requirements. Like when you think of taking a loan, normally you would think, oh, I need to borrow money that I don't have. But right now in DeFi, it's if I need to borrow $5,000 for something, I need to collateralize $10,000, which begs the question in most cases, like, I already have the 10,000. Why do I need to borrow money in that case? So that kind of limits the use cases to margin trading, leverage, like people that are locking the collateral. They don't want to sell their crypto to cause a taxable event, so they borrow against it instead. But what we're aiming to do is to, like real loans, like you use your credit score to prove your history, prove your trust, and you're able to borrow more money than you're locking as collateral. So now you actually have extra money that you can then go and use for like regular loan use cases. Student loans or business microloans, like anything like that. The other thing is that the fees are really cheap on Ontology. So lending and borrowing, approving loans, paying back your debt, and taking out new collateral, like switching around your collateral to different assets, like all those transactions are very cheap. And for a lot of people that use small amounts, something I've noticed, and because this is for me, like using crypto and using all of the DeFi platforms. Not only over the summer when everything really picked up, but also like over the past few years or so that these platforms have been around, the gas fees are always really high. And if you're not dealing with large amounts of money, then the gas fees will quickly eat up any interest that you happen to earn. So, especially for smaller users dealing with smaller amounts, even just $5 on the Ontology platform, just even lending out $5, lending out $10, that interest rate, you will earn that interest and you will have that interest. It won't just be eaten up by all the gas prices. So that's another, I think, big benefit, especially for smaller DeFi users who plan on taking out smaller loans or plan to lend out smaller amounts.
Definitely, and I think that's really one of the fundamental principles of decentralized finance is to have that inclusivity for the people that are underbanked and unbanked, and to be able to get microloans and start small, because everyone really needs to start somewhere, right? And I really like what Wing is doing with this inclusive pool while you're building a credit score in a decentralized finance way is something that obviously needs to be flushed out so that people don't have to take collateral and have twice as much money as they need to borrow, which seems ridiculous. And you mentioned the decentralized identity system. Can you just elaborate a little bit on how does the credit score get built from the get-go? Say you're a new person to the ecosystem and you're unbanked or you're underbanked and you want to take out a small loan. Does your credit score start at 0 and then it slowly builds up and that ties to your decentralized identity, or how does that work?
So there's 3 elements that go into the initial phase of the O score. And I mean, that could change, right? That could be expanded upon, it could go to take into account more variables. But the first thing is some kind of identity verification. So that's either KYC or social media linking. So like binding your address to your Twitter account or your email or your phone number, or multiple. So like to have multiple points of identity, so that you have an identity on the chain. The other one is your crypto balances and your transaction history. So knowing it scans your balances and it knows how much balance you have. So by knowing how much assets you own, it can assess like, all right, your likelihood to be able to pay it back. Can you afford to take out this much of a loan? So it's pretty much, it is kind of how traditional credit scoring systems work. The last one is your behavior on these platforms. So how many times have you been liquidated in the past, right? Using the traditional version of the DeFi platform. How risky have you been with, are you loaning up to 80% of your collateral? Are you trying to push it to like 99% where you're like at risk of being liquidated at any given moment, right? So it's taking, how degen have you been in DeFi over the past few months? Which is, I think, is a good way to build a score, because that encourages people to use the DeFi platforms, the collateralization aspect of it, right? Like in its current state. It's also interesting because it could be used to incentivize loyalty, which is, I think, something that these DeFi platforms need. Because I think there's been, right now, there's a lot of yield farming. There's a lot of people hopping back and forth to whichever platform is going to give them like the highest rate, which I think is good from a competitive perspective. Like these platforms need to keep competing to to offer better services and offer higher quality services than the other ones. But I think that there's also like a very big problem now that it's almost like mercenaries just going back and forth between different platforms. Like, okay, which one is gonna pay me the most? Which one is subsidizing me the most in the token? Which one has yield farming? Which one has airdrops? Which one has all this stuff? Which is not a sustainable way to build a community. So by encouraging people to stick with few platforms, right, to use them for a long time, it's kind of like I guess it is more and more like how regular credit scores work, right? It's like the more credit cards you have open, the more you use your card, the more you're rewarded, because it shows that you're not just opening them up and then just not using them. It's like you're being an active participant in the ecosystem. And I think that people get really scared when they hear like, oh, identity on the blockchain or credit scores on the blockchain. And I think that part of the reason is because, credit scores as we know them now are a very centralized thing that are very outside of our control. Like they're a number that's chosen for us. We don't really understand how, and we also don't really have any control for it, except for trying to be on good behavior to hopefully have them update the number for us. So, people say like, oh, we shouldn't bring that kind of thing to the blockchain because it's a very scary thing. But I think that it being that, because people are so scared of it, that's exactly why it's something that needs to be decentralized. That's something that this technology needs to disrupt. And I think it's primed for that disruption.
Yeah, I completely agree. And that fear is because there's something not right there. And with this new inclusive pool and experimenting with these new types of credit scores, I think that's a step in the right direction. And I just want to step back for a second. And you were talking about having ontologies, coins, Wing, Ontology gas, but also the Ethereum blockchain, tying that together to be able to use all those assets on the platform. And I was curious about Wing's token and the Ontology networks, and is there, because it's a decentralized finance project, is there incentives for people that are a part of the Wing ecosystem to help control it or to govern it in any way?
Yeah, there are incentives. So the Wing token itself is both a governance and utility token. So governance, it can be used in governing and voting to list new assets on the platform, like which assets should be listed next, what kind of marketing initiatives should be done. There's a community fund for Wing, and so you can vote on what should the funds be used for marketing, for influencing, for trading competitions, for hiring out new people, rewarding bounties for people that contribute certain things to code or to the community. The token is also a utility token. So one of the features of the Wing platform is that not only is there lending and borrowing, but there's also an insurance pool. And so the insurance pool is to protect lenders in case there's bad debt and like people don't return the debt, and then now it gets written off and the collateral isn't enough to cover it. So then it gets pulled from the insurance pool. And so the people that are providing liquidity to the insurance pool, they get rewarded with Wing as well. So if you provide Wing to the insurance pool, then you earn Wing for that contribution. And I mean, you can take it out, right? It's like, it's a pool. So it's not like you're donating the Wing. It's like you're providing it as liquidity in case there's a liquidation that needs the insurance, which, I mean, as of now, it hasn't happened yet. And the platform has been operating for about 3-4 months. And most of the time when there are liquidations, the collateral is enough to cover it. So this is kind of like in a worst case scenario that there needs to be covered by it. There's also, when you lend and when you borrow, you also earn Wing as well, on top of the APR and the APY. So if I'm lending out and there's an APY, which right now the APYs are really high for Wing, for Uni, if you're lending out Uni, even for SUSD, if you're lending out like say SUSD on the platform, it's 25% APY just in interest, just like in general APY. That's 25% that a borrower is paying you, and then on top of that is another 25% of the Wing APY, which is you're earning the Wing rewards.
Wow.
On the other side for borrowers, right? Like the interest rates right now, depending on the asset, like if you're trying to borrow Bitcoin, if you're trying to borrow Ethereum, the interest rate could be like maybe pretty low. It's like maybe 3-4%. But you're also earning, if you choose to lock Wing that you hold at the time that you borrow, then you can also earn Wing APY for borrowing as well.
Wow.
And you only have to lock up 3% of Wing to the balance that you're borrowing. So if I'm trying to borrow $10,000 worth of Bitcoin, then I only need to lock like $300 worth of Wing. So it works out. It works out and then you will start earning Wing, which right now effectively cancels out the amount of interest you have to pay. So you pretty much get the interest paid back in Wing. Which, I mean, as there's more users to the system, right? Like those rates kind of go down. Is kind of what we see happen to all of these DeFi platforms.
For sure.
So it pays to be early. It pays to be an early adopter. But also, that only means that down the line the rates they go down. But in a way, that's a good thing, because lower interest rates means that more people can come in even without the incentives. So that is ultimately the goal: is to not need those incentives to help subsidize the system. You're kind of just operating purely on the interest rate. At that point, the platform has enough interest rate flowing through the system.
Definitely, and more people using it, more liquidity, more people borrowing. So that's really interesting to have that Wing and so many different functions within the platform. And now we're running out of time, Erick, but the platform is live right now. I know that you guys are continuing to build on top of it. For viewers that are interested in learning more about Wing Finance and how to get involved in all of these extra functionalities, what's the best way for them to learn more?
So the best way is to go to wing.finance. And if you want to use Wing, if you want to use the platform on your laptop, you can install the Chrome extension called Cyano Wallet, which is how you use Ontology and interact with the Ontology chain. If you want to use it on your phone, you get the Onto app, which you can go to onto.app. And that app is a multi-chain wallet. So you can have an Ethereum wallet, an Ontology wallet, a Binance wallet, a Polkadot wallet, all in the same app. And then there's a DApp list. And on the DApp list, there's Wing Finance. So you can go on Wing Finance from within the app, and then you can lend out and borrow from there. So it's actually, I mean, I found that to be the easiest way to use it, this idea of like mobile first crypto. Also the fact that because it's multi-chain, you can also have your Ethereum wallet and then go and use Uniswap and, use all the Ethereum based apps. So it just makes everything like easier to keep in one place.
Definitely. Okay, well, I will leave those links in the description box below for the viewers. All the best with Wing Finance moving forward and Ontology, and let's follow up in the near future, Erick.
Thank you, Ashton.